helps with my microphone unmutes. Good morning, everyone. Let's try this again here. Good morning. Good morning. Hopefully everyone had a good day trading yesterday. We were out and about at the doctor's getting some COVID testing done and all of that fun stuff. And great news, it all came back negative. So it's just a common cold or whatever it is. It's whatever's hitting me and the rest of the family. It's not COVID. So yeah, thankful, awesome. And again, we talked about it in the chat room. But thank you for all of the well wishes along the way. Definitely appreciated. Anyway, mic check. Looks like everything's working correctly here. I think we're good to go. Welcome. Good morning, SSFTG family. And welcome to all the new members and everybody else. Good morning over on YouTube land as well. I hope you all have had a chance to rest up and get ready for the day ahead. As per the usual, make sure to read through the morning prep PDF. Helps if it's front and center on the right side of the screen there. Very important to go through and understand everything that is inside of there. Hey, Raphael, how's it going? Good morning. Everybody else so far, good morning. Don't forget to grab your morning DP levels. Those are posted for you every single morning on the Major 5, and I still don't have a mantra for it, so I'm not really sure what to do. Deep breath, but it's not long enough. Like, I've got more than enough air to go through that. Nasdaq, S&P, Gold, Crude, Bitcoin. It seems so short and punctual. I feel like I need to add the other ones back in there just so that we have our mantra again. Anyway, those are all posted for you this morning. As far as the news calendar is concerned, we do have a few things going on today, but the majority of that took place earlier at 8:30. That was the initial jobless claims, the Philly Fed Manufacturing Index, all that fun stuff. But all of the major news is kind of behind us at 8:30, and now we're going into 9:30 next, which is FOMC member Williams speaking. And that's it. So there's no real other news until 15:30 where FOMC member Daly speaks, and that's it. It's just speakers, so nothing else really going on. So let's take a look at some charts, see what's going on for today. The Nasdaq just keeps on going up, huh? Unbelievable momentum to the upside. Again, zooming back to like the 60-minute perspective, we can see what we're trying to go for. I wanted that secondary leg to the downside. It didn't end up happening, so that little barely 3-1 is going to be good enough. So if we're looking for a 382 blow on the top, that would be at around 16,600. Jeez, what a crazy move. Now again, this dip really isn't that much of a surprise. This is still in terms of parity. Looking back at what happened over here, that was 1,770 ticks. And remember, we were looking for that parity zone of interest, which is right there. It's no wonder there were so many bulls right there. But as it stands, I was really hoping to get that second leg to the downside. Couldn't quite get it. Oh well. More continuation to the upside. They're almost at all-time highs once again, and that's when things get a little bit weird. All-time highs are always kind of awkward, but things are still pointing up. It's bullish. It keeps going higher. Shorts are stuck. They're trapped. Whatever you want to look at it through, whatever lens, it's going higher. If we're looking at the 15-minute, we haven't made it to all-time highs yet, of course, but looking at the overall correlation zones that we've got going on, we've got a really nice correlative zone at the positive half DP. That would put resistance just ahead of that previous swing. It looks really nice, but that's it. Like, there's nothing else, because then it's all-time highs. So the only zone that we have, the previous high closes, opens, and a positive half DP as a zone of resistance on the Nasdaq. As far as support goes, if we can get a dip, none of these really line up very nicely until way down here at like the -1 or even -1.5 or 2. The negative half just is floating in the middle of nowhere. That's not supportive of anything. So in terms of zones of interest, it makes a lot more sense to see either resistance up at the highs shorter term, with longs having more support a bit deeper down. Specifically off the -1 and 1.5 look really nice. The -2 is just, it's the -2. It is what it is. Now, as far as the overall structure patterning goes, we do have a really nice continuation move to the upside, and we've been kind of tracking this L2 into a deep L3 and then a rotation back up. And remember, we were talking about how on the Nasdaq, the S&P doesn't have this, but on the Nasdaq, they missed the L1 and then started continuing back up, missed the L1 again. When they finally pulled back, they rifled through the L... Where's my drawing tool? Come on, zoom it, jeez. Yeah, you, where are you? There you are, slacker. Jeez. So looking at the move, a lot of bulls will be looking to buy into that L1, and they were massively disappointed. So one of the lines in the sands that we were talking about is when you get that deep dive, there's nothing saying that the bulls can't take it higher, but this is a big spot of resistance, and it was. The market cycled back down to an L2, ended up holding a higher low, and kept the cycle going. So off of this, we have an L3. We want to see, do they want to stick through? We haven't had an L1 yet. No L1 yet. Finally, we have an L1 pullback, and that's what's preceded this entire rally to the upside. That's been basically parabolic. It's the first time that they've come into structural support. It's been a minute, but they finally got it. Hey, Terry, how's it going? So, I mean, the bulls bought the dip. Now we're back up at the highs. We just got to see, do they want to keep this thing going? Looking really interesting, that's for sure, but man, where it is now, this thing is crazy. As far as the overall order flow goes, I mean, this is popping up. The only other area that we've got to work with is this previous continuation. So we've got this low up to the high. Still getting over it, sorry. That was probably gross. I'm trying to mute it on time, but I missed it. We've got this continuation to the upside. And with this bullish rotation, obviously they left behind this massive POC at 15,955. And with a POC that they left behind down there, I mean, realistically, it's pretty obvious what happened now. But the way that they did it is very jerky, herky, kind of gross. Because this POC, there's like no other volume until like way up in the 6. There just really wasn't any signs that we were getting any other POC shifts or anything like that. Then we made it into this next lower high. POC still hasn't shifted, right? So, I mean, it took them a long time to build this top. It certainly didn't get going very quickly. In this last move up, this final attempted trap, that was probably, yep, where they shifted the POC, and that's where they finally got the thing to drive down. Now, remember, from the perspective of stuck shorts, this will go for the S&P as well, so it doesn't matter if we spend a little more time here. The stuck shorts will be looking to get out. Now, remember, they're not going to necessarily just get out. We're talking JP, we're talking Goldman, right? We're talking a lot of zeros in the bank account. They can leverage up into these positions with thousands of contracts. So selling into this original position here, well, realistically, if they did get stuck short here, that was bad news. If the longs got in long here, they nailed their 2-to-1s all the way to the upside. You can look at it from both sides. Either way, from the stuck short perspective, if they're rallying back up, the next pulse in volume that we had was right here. Then the next pulse in volume that we had was really just this, way, way over here. So we want to see, like, okay, well, if they're rallying this in the middle, they've got two POCs, basically. Right in the middle should be roughly around a break-even point for those middle traders, right? They're going to be looking for that area of interest. So just eyeballing it roughly, oops, of course I deleted the wrong one. This little line right here will be their break-even point, give or take. It might be a little bit higher, it might be a little bit lower, but this is their break-even point where a lot of shorts got stuck. They finally built into their position up at the top. Now they've been given a chance to get out. So with this kind of concept, this extra rally to the downside is sort of icing on the cake, right? They built their POC up at the highs, so it doesn't have to go all the way down here. They were able to get out at break even, and chances are, if we were to measure up from the top down to the scalper's objective, sure enough, we find some supportive nature off of that area. And again, it's a give or take, so all of these could be hitting it as well. I mean, it's very obvious that the shorts got out at break even. If they looked to re-up, they got out of the scalp. They were not looking for major runs to the downside because they knew their earlier break evens were right there. So they jumped ship. And when you have extra icing on the cake and someone starts scraping the icing off, but you're a real big fan of it, you tend to pull it away really quick. Like, no, hang on. That's my icing, right? So they start getting out of their shorts a little bit more aggressively, and that causes sort of this, well, this, right? We don't have any new lows. It just goes up. So we know why, contextually, right? Fundamentally, it makes sense. Hey, Caesar, how's it going? We just got to wait and see what they want to do with that info. But, I mean, either way, the shorts are ripping it higher. Over on the S&P, again, similar story. But if we're looking at the bigger picture, the S&P is... Got to zoom in real close. Again, not at all-time highs, but really, really close. much closer than what the Nasdaq was. Real close. So the S&P, I mean, it's right there. And we've been talking about how one of the big differences that we've noticed from the S&P comparative to the Nasdaq is that the S&P is maintaining really aggressive patterns. They're holding on to higher lows. They're not breaking down. They're not getting anything going. And, you know, even the pullback was 0.22. On the Nasdaq, it was 3.1. I mean, it's not a big difference, I guess, in the grand scheme of things. But you can see, I mean, the S&P is definitely more aggressive. So we got to kind of come to that with a table. Come with that to the table? Jeez, oh Pete. It's not Friday yet. Hit the repeat. We've got the DP zones of interest, which really only line up at around the -0.5. That is about it, is in terms of, well, currently where it is. If it does want to dip a little bit lower, then we've got the -1 as well. The -1.5 is a little too far out there. As far as resistance goes, we already know the negative, or the positive half is acting as resistance off the top. It's not a stranger to that. We'll see how they want to respond. But again, after that, it's all-time highs. So there's nothing else. If we're looking at it from a cyclical nature, we've got the moves from the bottom in structure, which had that L3, similar rotation. But again, like we were talking about, they did have the L1 that led into another L1 that looked for the third L1 in the sequence, which failed. Again, creating a scenario of potential resistance. And it did. Rejected back off down to the L2, exact same thing, rotating back up to the highs. Now, after this L2 continuation, we have an L3 into an L1 completed, into an L2, into another L2. So if we do make another new high, another L2 in the sequence seems to be what the market loves holding on to. So if we can pop above another high, another L2, see what they can do. Not to sound like Dr. Seuss over here. 2 seconds. Oh my God, when this cough goes away, I will be a happy camper. This sucks. It's not like I talk for half a living. Jeez. All right. Looking at gold, we've got a good continuation to the upside. I mean, the big thing that we can see here when we zoom out to the 60-minute chart is that the trend is very much up. No questions, right? Zero questions as far as to where the trend is going. Now, when we zoom into the 15-minute chart, we can see there's a bit of confusion, right? That's why we point that out. Because when we look at this, like, well, wait a minute, what's going on? This looks disgusting. Do I want to be a buyer here? Do I want to be a seller here? Obviously, I want to be a buyer, right? But right here? Like, this just seems like a really awkward location. A lot of traders are looking for those low-sided zones of support. We just bounced off of one. So a lot of bulls will be looking for a continuation off of that to keep this kind of going to the upside. And you can kind of see the channel that it's creating. The original concern is that they blew off of the highs up here. And when they come down to the lows, that they're going to equidistantly blow off the lows. Luckily, that's very small. And, well, that was very small. And now we rotate back up in and with continuation up. The anticipation is definitely that we continue back to the upside. That's how spike and channels work, usually. But as far as the spike in channel is concerned, you usually want to see them come back and actually test where the channel started. That hasn't happened yet. It's actually been higher lows the whole way across. Hey, Letty, how's it going? Now, if we look at this from a volume perspective, because we did technically just create a new high going off of that new top along the way. Let's see if they rotated it up. It's a 15-minute chart. I didn't think I'd have to change it. There we go. Okay, so as far as the POC shifting to the upside, we can see where it is. Now, again, let's build the picture, right? Along the way, this trend is down. That's how trends start, right? They reverse out of something else. That's usually what happens. Now, it might have been a consolidation before a trend, but either way, sellers would have been looking for a continuation to the downside. And look at where the volume cluster is, right? Who would blame them for wanting to short right about there, given the risk above those previous highs being so small? And you can see where they started averaging in to get out at break even when they were wrong. So we can see what's going on as far as is the overall movement. Now, I mean, with that said, they got stuck, obviously, and rotated back to the upside. With that rotation back up, we create another major POC node, which would assume that the shorts would have been short here and the volume difference between the two is negligible, right? Not a whole lot. So it's probably just a 1-to-1. If they were short 100 here, they probably shorted another 100 here. Their average is about in the middle, right? Think of it that way. They're just kind of hanging out in the mid. Not really doing anything yet, waiting for it to cycle down. Maybe they get the same scenario that we were just looking at on the others. Maybe it doesn't. We'll have to wait and see. In this case, obviously, it didn't. They went screaming all the way to the upside. So with this massive rotation to the upside, we have a third one, which is significantly larger than the others. Now, what is that in context? Well, we know that this is probably just a double up. So the fact that this is so much larger probably just tells us that they doubled up again, right? If their average was here, then it was here. That means that it was kind of in the middle, right? Then they double up again, right? Well, that's sucking their average up to the highs, and now we've got a POC off at the top. So we've got to ask ourselves, right, what's their downside objective here? What are these gold shorts looking for? They got stuck originally, obviously. So if they're looking for a downside move and they sold, let's just use easy numbers, sold one here, sold another one here to bring it up to 2, and then sold 2 here to bring it up to 4. That's what we're talking about, right? That would put their average right about there, right? Not much has changed. So from a downside perspective, if we look at what's going on off of the top to the bottom, we can see that scalpers are taking their objectives. Now again, this doesn't necessarily mean that these first times around are actually profitable. They could definitely be losses from earlier, right? They're getting out because they want their average up here. If the market does fall, then the downside objective having their full load up here rather than spread out across this whole move up makes a lot more sense, right? So what are they going to do? Well, they're going to start liquidating at logical points of interest like a scalp. So when they start scalping out of this, that doesn't necessarily mean that they're initially profitable, right? They're exiting to drive their average up. When it comes back, they resell more because they're trying to get their average up. Now, the next time it comes down, it might be profitable, right? They just liquidated all the losses, so they have to make up for the losses. Profitable is relative here. But now that we're back into the break-evens again, they're selling more, going all the way up into the L3s before rotating down. Where do they take their profit? Weird. They took their profit off at the scalp spot. Crazy, right? So we can see what's going on. The shorts are trying to build their average to the upside, but they're getting nervous, and it doesn't look like they've necessarily gotten done or finished building their average up to a point where they're comfortable, because they still continuously scalp out at the scalp targets. They got to get through there. So, as it stands right now, shorts are still probably stuck, but to be fair, to their credit, they've done enough work where the damage is almost non-existent now. Anything to the downside is just going to be icing on the cake. Noting that, if it does rotate back above settlement, that's probably going to be a bounce point for support, because those are going to be the shorts who are getting out. So, pretty important as to what it wants to do here. We are on a ledge. Shorts, as far as probability goes, kind of sucks. But again, they've built their way up. So where they are now, if you were entering to the downside, that would be more like a 2-to-1 or 3-to-1, I suppose. So I guess it's better now where it is, but it's not before they got steamrolled on the way higher. How's it going, Ace? Brad, good morning. Banana Jammers, welcome, welcome. I love the name. Good morning, good morning. Over on crude oil, we've got this sideways momentum again. Looking at the 60-minute chart, we can see that we're starting to tip a little bit further to the downside. This downside momentum, right, we've got to ask ourselves, what are they trying to accomplish here? What's going on, right? Is this just a range low? Or are they trying to get something a bit more tilted? Seems like right now, they're trying to get something a bit more tilted. So at the moment, I'm kind of looking for maybe a little bit of wedge support. We might even have to go over here like this to see if they want to continue off of this type of patterning. It's getting a little bit weak, getting a little bit gross inside of here, but obviously this is a major support zone. So if the sellers don't hold it from here and get this to go lower, then, I mean, realistically, what's going to get in the way of the bulls just sweeping this right back up to the highs? Who wouldn't want to buy into a trend like this, right? I mean, let's be real. So this whole move down, this dip seems to me like nothing more than JP and the crew coming in and taking all the stops. Yes, please. Pac-Man that baby up. Now, they didn't make it to a new high. That's a caveat. In fact, all of these have been lower highs. That's a little bit of a problem. We'll see what they want to do with that. Hey, Steven, how's it going? Going into the 15-minute, And looking at the overall trend perspective, obviously here it's also positioning itself to the downside. If we look at the overall DP relativity, man, I can't find words today. The only ones that we really have structurally are going to be like way up here. These are going to be like the 1.5s, the 2s. Like they're way up there. In terms of support, we're already kind of on it. That's bouncing right now. In terms of resistance, so this has got a long way to go before we find any. So that does tell us that sellers are obviously in charge. We already know that. But as far as a little bit of a continuation phase, looking at the volume, hey, 7 miles going. If we look at this last move, because this did pierce up to a new high. I mean, that was a big move up. That was a big, big move up. And then it rotated all the way back down to a new low. At the very least, it trapped that inside swing. Right? So with that little inside swing trap, we know it's a trap now. Obviously, in hindsight, that helps a lot. But again, several really obvious lower highs before a catastrophic fall. So if we're looking at where we are now and we're seeing this kind of same thing happening over and over again, then really what I'm looking for is looking for a pulse above a previous swing. They're doing it constantly. They just broke above a previous swing here. That was also a trap inside there. If we look more recently, there was a little trap there. There's a little trap there. That's all they're doing right now are these little bitty traps above these swings over and over and over and over and over again. The problem is we're 1.5 miles away from any of those swings. So the only one that we have to work with really is like up here in the 80, 75s. I mean, like crude just might be off the table today. There's just not much that we can do where it is now. As far as the volume is concerned, looking at it from this overall rotation, they did make a new low. So from an impulse perspective, from the top all the way down to the bottom, it's probably going to be in the middle, right? It's got to be like 80. It's got to be. Come on, it's just a 15. All right, 79, 75, whatever. So we've got a pretty obvious POC built up in the middle. If it does want to rotate higher, we might have some maybe interim resistance around there. I guess it would be technically trapping these little swings. Is that enough? I don't know. We'll have to wait and see. Crude's kind of off the list right now. Over on Bitcoin, we've got, well, mostly stagnation. The market's just going sideways for the most part, not really doing a whole lot, but we do have a nice little two-legged correction phase to the downside, which is almost equidistantly perfect. Although we are dealing with this support, or supposed support, acting as resistance right now. So it may be that this current leg down is still looking for another like half deviation lower. And we can see that we haven't really gotten that far away from settlement. Zooming out to the 60-minute chart, we know this is a major zone of support, right? So we know why it's getting stuck here. That's obvious. But again, what's one very big thing that happens when you have a big drop or a failure? Lower highs, perpetual lower highs. Lower high, lower high. Now look nearer term. Lower high, lower high, lower high. They're struggling, right? It's not to say that the bulls can't take this, but having an angled down move like this, that's tough, right? I mean, they've got their work cut out for them. I really want to be a bull here, but where are my other bulls at? You know, like who's my backup? There's not a whole lot going on here. Structurally, this is definitely a DCA zone for me, at least. I like this area as a DCA. If you're not familiar with what that means, that's dollar cost average, so long-term growth. Go back to like the $1 a day crypto video. That's the kind of mentality. Long-term growth, short amounts or little bursts in capital that you're not really going to notice. That's DCA. When you're down like this off of the top on a pullback territory, that's DCA territory, right? We're in the dip. Now, it doesn't mean that it can't dip another 20%. The next big zone is down, if I remember correctly, in the low 44s to 42s. So, we'll see. Hey, RJ, how's it going? We'll see what they want to do. Got the open right around the corner here. Let's get our news rolling, see what's going on. As far as the overall morning momentum from a nearer term 15-minute chart, we know again, POC scalpers, well, they didn't get filled. We know they're stuck, right? We've been talking about that. Still, all the way up at highs, gross. I mean, what kind of cycle do we really have? Whoa, no, I don't want to buy anything. So don't start off the day fat fingering something now. Come on now. Hey now. All right. Anyway, I is obviously a little wedge.
Just a reminder for you, in 5 minutes' time, we are expecting comments from ECB's lane.
I tell you what I would love to see. Impulse PO. Yeah, there you are.
We have the link out to the event on the
that's tasty.
There's
that POC. Right underneath the lows for a trap. Where's the POC now? I'm sure it's shifted up. Ooh, man, that's way up there, though. What about this next high? Is that a little lower? Okay. I'm trying to fit it so that a downside move... Okay, that's pretty good. A downside move off of this average is about a 2-to-1 for the short side. So this lines up everything. We've got the shorts taking profit for 2-to-1s and a structural zone of support lining up in the same spot in a bullish trend. I like it. Hey, Maurice, how's it going? Give me 2 seconds here and then we'll jump in, but I am looking for that little dip down there. All right, we're back. Sorry about that. All right. Sellers seem like they're taking over off the most recent POC. Hey, Sinai, how's it going? Yeah, you got it, Caesar. Yep. I just had to duck out for a second. I'm coughing up a freaking lung here. Yeah, for sure, Ace. Yeah, it doesn't bother me at all. I'm an open book. It doesn't bother me. As far as all the testing and everything yesterday, the COVID test and everything came back negative. So that's awesome. The kids are feeling fine. They're totally fine. They're actually on probably the back end of it because they're the reason we went in the first place. So they've been dealing with it for a little while already, and they're already doing better. Me, on the other hand, if you couldn't tell, it's hitting me right in the throat. I sound like I'm going through puberty again. So it's going around, but we know it's not COVID. So I'm just drinking my my honey tea and Dr. Pepper this morning because I wanted to treat myself. It's probably horrible for my throat, but I wanted to treat myself this morning. It's been a rough frickin' week. It's the first pop I've had in probably like 3 or 4 months. I don't drink soda very often. And for those of you who, on the caffeine side of things, I've been staying aside from the Dr. Pepper, right? A little bit of a relapse, fine. There's a little caffeine in there, but I have not drank any G Fuels. I have not drank any Monsters. I haven't drank a single energy drink, only water, and aside from the Dr. Pepper in my tea, like that's the only caffeine now. And I tell you what, the first couple days just put me out of my misery. That was horrible, but after the headaches and everything, you feel a lot better, man. You wake up and you don't feel so groggy. I don't know. Maybe it's just me, but yeah, something bad's been going around. Here in Michigan, we're one of the leading ones for COVID outbreaks as well as like flu, and I mean Michigan's getting just railed right now. I don't know if that's changed, but I think it was yesterday or maybe the day before that I saw that or read that or heard that somewhere. we're not doing too great over here. I'm pretty sure we also topped the charts on unemployment. You know, great going into winter season when you need money to be able to buy heat. It's not disappointing in the economy at all. But yeah, anyway, 9:30. I'm not gonna go. I'm not even gonna jump on that bandwagon. No, thank you. A little bit of a dip down. See if we can get that lower move. All right. Well, I got one. I tried getting two. I feel incredibly blessed to have even gotten that one at the moment. Jeez. Nice little cycle down. Hasn't hit that area yet. Yeah. Wow. Oh, I didn't get filled. Oh, there it is. There it is. Nice little dip down on this low. Now we are dealing with the open, so volatility at the open tends to be a bit aggressive. So I'm going to keep it on the light side for the moment on the Nasdaq. Looking for a return back. And on this little pulse to the upside, I'm also going to add to a hedge to the downside on the S&P. The difference between the Nasdaq and the S&P should not make a big difference at all, but just in case. 91 is the objective down there, but otherwise looking for the Nasdaq to rotate back above the 8850s. Ooh, S&P popped down real fast. Lordy. Excuse me. Let's look for this continuation across the difference, because again, the assumption is that the sellers are looking for their profit targets down here. Not really any reason to add to the risk, and it hasn't gone up far enough for me to really modify anything yet, so I would rather just leave it as is, with the understanding that we're dealing with open volatility for right now. Starting to build a potential for a descending type of resistance, but it hasn't even broken out of that yet. So. If they do jump back to the upside ahead of time, the continuation would be up into like the 92s or higher. 97's the POC. S&P is cycling down a little bit, but I mean, you can definitely see what's going on. We know the shorts are taking a lot of profit down here, so they just haven't slipped yet. The bear trend is still active. I like that little zone down there with the anticipation of trying to get my average a little bit lower for the next pulse back up. That would make a scalp a little bit different. Not a whole lot. I was hoping by now the S&P would have hit the objective so I can take so I can start averaging out of my Nasdaq, because the first one I take off is probably going to be a loss on the Nasdaq. At least based on first in, first out. But they haven't hit the the S&P hasn't hit the target, so starting to hear the Nasdaq bulls trying to pressure back up. Awesome job, Ace. I'm hoping the S&P... Yeah, I was going to say, I'm hoping the S&P can give me a pulse down so I can liquidate that first one for a loss and drive my average lower. There we go. I'll look to re-add into the hedge for the downside on the S&P because I think that the bulls weren't necessarily expecting this move down. We'll go with that, with the assumption that they're probably going to start exiting as they kind of play around to the break-evens for a little bit here. The shorts are still getting their targets filled. We're finally starting to break out of a little bit more of the bear structure. Still waiting for the Nasdaq to figure out what it wants to do. Having some problems with your orders? That's not good. It's trading too big. Yeah, exactly. It even passes through it without getting filled? Whoa. You might want to... Well, first off, make sure you're connected to the right stuff. Restart NinjaTrader, all the normal stuff that you would typically do with Ninja being stupid. But if that's not the case, then maybe consider calling your broker. That's not normal. There we go, bulls. Lightning round. We just got to push above those 80s, and we got them. I'm going to jump ship on the S&P now. It's unnecessary, and we'll follow this last one through and see if we can get it to run. Where are we at? We're above 2-1. 3-1 would be next. 5-1 is closer to the POC, though. So let's see if we can get a 5-1 run. If they start, remember, we're at the 2-1, 3-1 zone, so if they start losing their ground too much here, we've got to kind of be cognizant of what's going on. They tap the 3-1 objective. Still hearing the bulls trying to come in. Big pulse, I'm going to take that as my sign to call it. That's good enough. That'll compensate for some of the losses on the way down. That will also take off between the 2-to-1, 3-to-1 zone of interest. Good enough on that last final rally. It definitely didn't work the way that I wanted it to, but the hedge made it a little bit easier. Yeah, that's all you got to do, Ace. Just trade 45,000 contracts for one tick. Easy peasy. Bulls continuing back to the upside. Well, unfortunately, I only bought the one down there. I was going to play it on the light side, thinking that this was going to slide a little bit further down, but... Well... SOCKS, right? Yeah, if you want to trade big size like that, trade the bonds. Then it's 31.25 a tick. You can trade like 1,000 contracts and it fits in like nothing even flinched. 1,000 contracts, 31.25 a tick. You only need to do one tick a couple times. You'd be good for a year. Of course, it takes like 17 years to get filled on the bonds, but you know, whatever. If it's easy in one way, you're gonna pay for it in another way. You're saying the bonds is more liquid than the ES? Oh yeah, by like 1.5 miles. Here, let me pull up a level 2. I never remember which one it is. It's that one. Okay. Instruments. I think I can just type it in. ZB futures. Yep. So if you're looking at the bonds as an example, this is actually very small. This is surprisingly small. But still, 500, 600 is very consistent. Like, that's the norm. Excuse me. Now, if you compare that to the S&P, let me pause it. 100, 100, 100. 100's fairly consistent. 200's a little bit further down. So the bonds are way thick. Like, huge. I think the 10-year notes are even thicker. That makes it even harder to get filled. Yeah, that's why I said it takes like 7... we timed it one time. This was a couple years ago now, but we were taking a trade on the bonds and the notes, and it took 3 minutes of price sitting on my price to get filled. Just sitting there. Like, hello? Anybody home, please? I just want one. Took 3 minutes. It's so slow. I can't handle that. No, that's not my jam. Those are actual numbers. Those are the actual future sizes in the hundreds. It's not like stocks where they put the zeros extra. No, those are the actual sizes. Remember, that's just on the bid and the ask though. So and beyond. So I mean, they can change that at any point. Those aren't necessarily fills, but those are pending orders that are waiting. Could you imagine that? Man, I'd be ripping my hair out. I mean, to a degree, it can be hard to believe, but if I pause the screen real quick, look at the time and sales. All right, this is probably like maybe a second or two worth of price. Just ones. 2s in there a little bit, 3s. I saw a 5 flash by a second ago, you know. But these are filled orders. That's the difference. These orders are filled. The ones that we were looking at on the level 2 are pending limit orders that are waiting and not filled. Yeah, pending orders. Yep. It's the same thing if you look at the Gomi ladder or the order flow volume whatever it is. Those are all also pending limit orders until they actually get filled on the time and sales. We know better, we do better. I like it. The market's just going real sideways, going into 945. Nothing really changing, nothing really happening. Excuse me. Man alive. All right. If bulls are going to be looking for a continuation phase to the upside and actually take this, then the sellers have to fail here. We should start seeing them well, just like that, actually. Now, they got to stick the landing. It's all wicks up here. Nice little move back up. Down in these 85s, 86s will be the continuation phase for the bulls to try to get things going. It's a little bit further up and top weighted, more for a scalp. Yeah, nice little continuation scalp to the upside. But, I mean, with one contract, that's about all I've got to work with right now. If they can get something bigger to move, then maybe we can swing out a larger position, but buying way up here makes it incredibly difficult. There's the follow-through, of course. Right after I got out. Perfect idea. Or perfect timing, sorry. I saw Steven's comment when I was saying that. You don't know what was going on, huh? Oh, weird. Well, fingers crossed it doesn't happen again then. Big old rotation to the upside. A lot of wicks. Heavy continuation, breaking back above the POC, demonstrating that the longs are actually taking over. And this is a move that technically started from yesterday. That's back in like 4 o'clock, of course. Why wouldn't the order flow be bugged? Well, I don't know what the order flow looked like because it's bugged. But, well, either way, it's frustrating. We've got a continuation phase to the upside. Looking across the board here, Bitcoin's still hovering around in the zone of interest. That's really about it, though. Crude's got a ways to climb, but it's getting up into the positive halves. Positive ones, it gets a little more interesting. Yeah, all-time highs. I mean, once again, thanks. These all-time highs are so to trade around. Just remember, you know, I know a lot of people have difficulty trading around all-time highs, but remember, the all-time high today could be the low of, you know, tomorrow. The all-time high is irrelevant. Just kind of play off of where we are. If we're going into previous structure, we've got a lot to work with. But when we're in all-time highs, it's kind of naked, right? We don't have anything to support it, except support. There's no resistance, obviously. So the only thing we can do is project. Or wait for the dips to buy into. But, you know, remember, at one point, Bitcoin's all-time high was 3,000. Just say it. That's what I have to tell myself every time. They're just forging new grounds, that's all. The way Nasdaq's moving is kind of reminiscent of how Bitcoin moved in 18 all the way up to 20,000, you know? Jeez. That big old rally up.
£4 billion.
More continuation up. Buyers are buying incredibly aggressive dips right now. I mean, what's the structure? You've got, like, okay, L2 into an L2 in little microstructure L2s, really strong breakout afterward, and now we've got an L1 that just tested. So I guess the next zone would be the 2.
time, we do have the US leading index change month over month. Forecast 0.8%, previous 0.2%.
Bulls for another, I mean, we've got another L1. We've got another continuation phase. They've just got to ramp up a little bit. There's no bullish pressure that we've heard yet. They've got their trigger. They've got everything they need to try to carry this up. But they haven't hit the gas pedal. The bulls keep picking up into this L1. Now, a bear signal bar there would be a really, really bad signal. I like that for a trap to the upside. Yeah. I really like that for a trap to the upside. Signal the sellers in underneath that little move and get it to rotate back up. Well, I had a quick little scalp move, but then flush through the base. All right. Beautiful dip on into the lower L1s. And the L2s are the hot spot. Of course, I don't get filled out in the L2s, but now we've got the dip in the L2s. Jeez, oh Pete. We've got a heck of a lot of volatility going on. Because of the volatility, I'm going to see if I can add a short on the S&P for a hedge. Just to play it safe. It's not like we're dealing with the open. We don't have any news to worry about, so again, just playing it on guard. That could possibly be setting up for a failure off the top, so we have to put up the defenses.
Prime Ministry spokeswoman goes on to say that the Board of Governors will be meeting next week, and they must send a strong message to Iran.
I'm going to look to add another one on the S&P for a continuation down further into the 90s. I do really like this drive down. What a yank. Yeah, exactly. It feels like a rug pull. It's like, nope. They tripped them up. So with something like that, that's why I've got to put up the defenses. These let me try that again. These moves to the upside are very likely going to be bulls simply buying to get out, right? They're trying to get their average to go down a little bit further. Filling the objectives on the S&P for that downside move. And continuing even further. Jeez. We've got the L4 dip. Continuation phase back above the highs. If I were looking to go short, 387 to 90 would be the zone that I would look for a scalp short. So that would be the zone that I've got to look to possibly start liquidating a bit. See if I can get filled a little bit further up on the S&P, back down. Try to drive my drive my average down a little bit further by simply selling and buying in the exact same price, but driving my average down with the assumption of just, well, that in mind. I'm trying to get my average further down to the L3s, L4s. If it does want to jump back to the upside from here, then I guess realistically we still can't fit a 2-to-1 swing in the move, but we can fit a scalp.
So at 10 a.m. Eastern Time, we do have the US leading index change month over month. Forecast zeros about 8%.
We've got 10 o'clock right around the corner here in 5. That's where we transition over into the extended session for VIPs and members. Then we can get rocking and rolling over there. Might still be in this one, depending on what it wants to do, but... Wow, I got a really bad fill on that. There we go. Can drive my average down a little bit further. Still haven't done enough work to get a 2-to-1 inside the highs, but I mean, we're getting there.
Senate support ministers, Democrats should handle the debt ceiling on their own.
The market seemed to like that. Yeah, Democrats. I am not about to start that fight. Nope. It's not about politics in here. No thank you. We've got enough separation in this world. We don't need that to add to it. I'd like to see, again, I'm still trying to get a slightly better fill down lower so I can get a 2-to-1 to actually fit. Nice little dip down here. Can't seem to get a fill on the S&P. There we go. $88.50 to $87.50 would be back down to the lows again. I still haven't gotten that 2-to-1 to fit. It's right there. It's peeking its head above the horizon.
ECB's lane says bottlenecks are not expected to get worse, and they will ease.
Possible short-term zone of resistance that we'll have to deal with above the highs. 10 o'clock right around the corner. Is that enough? Really? It's still not enough. That means that I've got to liquidate down here a little bit more. There. Now I can fit one. And I tried so hard to get a 2-to-1 to fit, and I just couldn't get the stupid thing to fit. Oh, and I got to exit my my S&P as well. Yep. All right, fine. Nasdaq, have it your friggin' way. Jeez.
1 minute to go now. ECB's lane says
10 o'clock right around the corner. I would still love to build into this dip because I love what they're doing, right? Everything around this area is suggestive of a continuation to the upside. But the issue that we've got going on right now is that that rug pull off the top is going to have a lot of bulls spooked. So I've, you know, like I said, we've got to put up our defenses. They are buying off of that scalp target. Those little nuances. I don't really want to buy that far up, personally, but...
Lane says we expect some pickup in wage dynamics, and we are just 10 seconds away now from the release.
10 seconds. See what the news does. Excuse me. A little bit of back and forth, but continuing
Still
back to
waiting
the
on
upside a little bit more here. Some wicks on the base in those 80s, 90s. So it does seem like those scalper bulls, they did pick it back up.
0.8%.
Not quite there yet. Heavier sell volume coming in the S&P.
ECB's lane says we're not seeing inflation expectations unanchoring to the upside.
I didn't get a fill. What? Are you kidding me? Wow, that's not fair. I'm gonna ride the snot fair home today. Jeez. That sucks. Yeah, that's right. I'm growling at the Nasdaq. That's so frustrating. I got bottom bid. The one struggle of buying bid. No. See if they want to trap underneath that last bull bar. I was going to say, don't you do me. No, 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 no. Okay, there we go. That was ridiculous. Yeah, they missed me by one tick and then jerked straight up to the scalp target.
Williams says it's very hard to measure the natural rate of interest.
One more good pulse is all they need. Oh, okay. Well, yeah, that. All right, have a good one. Enjoy. All right, that does mean that it's 10 o'clock, so let's rotate over into the extended session for VIPs and members, and we'll get that going. As far as this little dippy-do to the downside here, there's a really choppy zone, big time. Let's switch over into the extended session, then we'll get things going from there, and then, yeah, we'll rock and roll. So, if I missed any questions for the morning side of things, feel free, shoot me an email. I'll get them covered for you from there. One way or another, though, we'll get you covered. Take that little pop back up again. Nice. Or you can drop them in the comments below. So far this morning's been kind of a choppy, sloppy market. For me, I'm kind of down. After commissions, definitely down, but basically break even going into the rest of the morning session. If we're looking at just today so far for the math, why does it do this? It does it every time I hit today, and then it goes back like 2 days. All right, dollars and cents aside, those don't really matter. We know today was mostly a scalping day. So if we look at the overall numbers, 66.6% accuracy is, you know, a little bit on the low side if you're trying to get successful scalps. The average winning trade, 19. The average losing trade, 46. I mean, we know it was a challenging day. As far as the trading math goes, and again, there's trades that are currently on the table, so this will change as the day goes on. The largest winning trade, largest losing trade is 1-to-1. So that's a good sign that we're on the right track, and we already know that there's one trade that's still active. But if we look at the overall numbers, just to see them, 66.67 minus 100, 33.33 times the losses of 46, and then the 66.67 times 19, negative 15, 33, 18 is a negative 266. So we can see as far as the trader's math is concerned, it's not like it's way out of whack. It's not like it's negative 7 million or something. You know, it's a negative 200. The last time was a positive like 1,200 day. So we know that we're on the right track. It was a difficult day. We already know that. There's still a trade on the table, and we still have more day to go. But you can see, on a negative day or a difficult day, as long as the numbers are still in alignment with the average, you're all right. You know that you're following your plan. That's the key. Today's a negative day so far. That may change as we go on, but we can see it reflected in the numbers that nothing's crazy or out of whack. Let's continue on, see if they can rally up and grab this next move up or keep giving me scalps. Man, they're just feeding these scalps to me on a silver spoon right now. See if they can follow through. But anyway, that's going to do it. Like I said, if I miss any questions, shoot me an email, and let's transition over into the extended session, all right? Have a good one, and we will see the rest of you all tomorrow morning. Thanks.